This is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, September 24th, 2019. I wanted to do this one now. It's probably a good example of real-time trading, how to make decisions, how to decide what to do when you see a decent reversal. Look, nothing big really overall. The market's only down. The S&P's down 0.14%. Which is not much. But what did happen today is a pretty healthy reversal. They ran it up, popped what looked to me like a pretty obvious stop pop. I know there was consumer confidence and a couple of other minor reports out. Typically not those that move the market much. They're not red dotted on the economic calendar. If you don't know what I'm talking about, go to the click on the resources tab on top of the site. Brings you into the right side of the chart support center. Go down to the tools of the trade, and then you can get the economic calendar, and you'll see what was on there. And again, they put a red dot by potential market moving events. Green dots are events that are somewhat important, and I'm just going to click another monitor here. In today's calendar, we had consumer confidence and S&P core logic case chiller. So a couple of reports, FA house price index, and that's not a market mover, and we had the red book at 855. All right, I don't want to digress. I just want to mention that was just, to me, seemed like an apparent stop pop to try to foil this flag there, and then you can see the impulsive reversal afterwards. And as I said, the nature, when you're looking at bear flag patterns, ideally you want to see there's several components, but first component's an impulsive move leading down. Not a zigzaggy, wishy-washy move, but an impulsive move, and that gives you what they call the flagpole. Then you set up at a flag. It's an area of consolidation on decreasing volume, which we do have here. I don't know if you can see my volume bars. I keep them the color turned down. I don't like too much popping out on a chart. I can make it out there. And that's what you had. So you have a higher volume on the drop, a lower volume, slightly upward consolidation, and then, most importantly, an impulsive breakout. Now, typically, if it's going to play out, and it doesn't mean it has to just because we broke down, but if it's going to play out, then it should be a roughly equally impulsive move down. Doesn't have to mirror that, but again, you don't want to see this and this and this. I mean, we could still get to my target. Don't get me wrong, but an ideal bear flag will play out like that. Pretty impulsive. And as I said in the updates last night, you take the measured target here. I'll show you how I do it. You use a trend line. I'm just doing this now. Well, let me do this. Let me move this trend line over here and drag it down to the bottom of the flag right there. There you go. And then you add that to the highest point of the flag before it broke down, which is right there on today's candle, red candle, and that's where it gives you the measure target. So again, it measures perfectly, just as that head and shoulders pattern on SPY does as well, or the S&P 500, and that just started to break down. Little green candle through there. I had assumed it would break down today, so now I need to move this line over here. Well, actually, that's the breakdown right there. Yeah, it was where I had it. That's today's 60-minute candle. That's where I had it last night. That comes down there as well. So let's go back to this. And then we'll see what happens to follow through. But again, this is why I want to do the video. So that's SPY. We'll look at QQQ quickly before we move on to the futures, because that's really what I want to get at. And this is what I talk about all the time. If you are a SPY trader and you only trade SPY in a vacuum, you only follow the SPY charts, you would have probably jumped the gun or taken that breakdown of the bear flag. But as I said in the post that I put out there just now, to me it doesn't work that way. I know, because half the traders out there will trade SPY, the other half will trade NQ or QQQ. Some traders trade the small caps. I'm general. I know that doesn't add up half and others, but you get my point. There are some traders that prefer the SPY, some traders prefer small caps, large caps, some QQQ. And the thing is, these are the two that I focus on, these two large cap indexes, and you want to see both break down. So what do you have? Well, number one, I've been highlighting the 189.40 level for quite a while now. And so there were a couple things I said in that post. You want to see a solid and impulsive break, and ideally a 60-minute close below these support levels. So QQQ overshot it briefly, but then snapped right back up on it. And as of now, as I'm doing the video, we're at 189.55. So that's not a sell signal. if you would have taken the breakdown, you jumped the gun, because it was, as I spelled out there, that's what we call a little brief momentum fueled overshoot of that support, and so far that support is held. So that's QQQ, and again, same level I've been highlighting for a while. It's the top of the trading range from August. Now let's look at the futures. All right, so we go to NQ. Same level I've been highlighting for a long time, 77.89. That's what I have as the top of the range on the NASDAQ 100 futures. You can see it right here as you go back in time. Lots of reactions there. Very, very technically significant level, an important level. As I said, in my opinion, more important than the neckline on that head and shoulders topping pattern. So the head and shoulders topping pattern broke down, but as I said yesterday, if that happens, then you have an even more important support just below, and that needs to go. And it doesn't mean when you tick down to 77.88.75, that's not a breakdown. Especially if it's a big long candle, you're already stretched near term. You want to see an impulsive break and ideally a 60-minute close. Now, if 60-minute close depends on when it happens. If you're early in the 60-minute candle, well, a lot can happen, and you can miss that entry if you wait for a 60-minute close. So there's no easy answer here. There's a bit of subjectiveness, and you have to kind of adapt and watch all these charts. At the same time, if NQ starts to now move below, and I just responded to somebody in the trading room. They asked, hey, was this impulsive move? Is it time, Randy? I said, no, right now, as I typed that about 10-15 minutes ago, I said, right now we're back on that 77.89 level after a very brief overshoot. And so basically, this is TA 101. We're on support. I think it'll go. I'm doing the video now. I assume by the time I'm done with this video, we'll probably have those sell signals. But if you want to play it safe, because the primary trend, the larger bull market trend, is still up, and that makes you have to give it the benefit of the doubt when looking at these shorting ops here. So that's it. So let's see a reversal, and I'll make it a little, I hate to oversimplify things, but what I had said to that person in the trading room was, from the point I typed that in, I gave the time that I was typing it, and I gave the actual levels. I said all you need, I think what will do the trick now is a break below the lows of the day, the previous lows on QQQ, which I gave, well, that's right here. Here, I'll put a line there for you. This is a 2-minute chart. Let me go to a 1-minute chart and show you here. Make this quick. So I might not hit it exactly. I wrote it whatever it was. I can put the crosshairs there and tell you the exact level. Low of 188.89. But you get the point. If we thrust back down, because we've already had an overshoot of the level I was just showing you on NQ in a quick recovery. So any move back down now, the momentum, that velocity coming down is already gone. So another move down should do the trick. PPOs or the MACD is starting to roll back over there, and so it's TA 101 in my opinion. TA 101 says you do one of two things when a security falls to support. You either go long at support, and look, you can do that and it may pay out. You could certainly go long there with a stop somewhat below. I'd put it right below today's lows. Not what I'm planning, because I think these are going down. I'm already, short and plan to be even shorter, if that makes sense, or more short once that breaks. So there's QQQ, low of the day. Oh, and let's talk about ES as well. Again, in a vacuum, if you're trading ES or NQ, you might have taken that breakdown, but here it is on ES, and you can see 2980 is the level that I've had, and I highlighted that in recent videos and some of the screenshots that I've taken. That's where that's been holding support. There were some reactions in here as well, and so that was not taken out. So where am I going with this? Well, I showed you a breakdown on SPY with a bear flag, a little crack below that S&P 500 head and shoulders pattern, but nothing impulsive yet. And bottom line, you want all as many check marks as you can get. And so these are all the check marks. That one hasn't happened yet. So let's just let me put an X there. Break, especially an impulsive break now. Maybe we're flagging here. If you look at this, if you really zoom in here, I can show you what it would look like on a. Sometimes I start to speak of things that I'm seeing in my mind's eye, but they're not there in the video yet. What I was seeing is a potential flag type pattern. Maybe it shows better on a 5-minute chart. Yeah, this is it on a 5-minute chart, because we had an impulsive thrust down today off the highs. And again, this has nothing to do with that 60-minute flag that I posted last night and previous day, but you have this potential flag pattern right here. And if I can draw it out with the trend line, there it is. So now, remember I said today's low should do the trick. So if things play out as I suspect, soon we'll break down below this 5-minute bear flag. It should be impulsive and it should undercut those lows, and then at that point you probably have a pretty high probability short entry. You want to wait for an even higher probability entry. You wait for a solid 60-minute close. You can see there's some support just below on SPY as well. 296.61, somewhat decent support. I'm putting a higher weighting again on that ES chart right here on the futures, and then again NQ. As I'm doing the video, there it is. We're still above there, and that looks like flagging action too. Not so much on the 60-minute. That's why you have to play around with time frames. Sometimes you have to go here, QQQ. Let's see. Go to a 5-minute chart. See how it looks there, and there we go. So you can see what appears to be flagpole, either a bearish pennant or a bear flag pattern. And so you want to see an impulsive break out of there and an impulsive undercut of those lows, and that should do the trick. Otherwise, what you're looking at, and so far as I'm doing this video, is a successful defense of support. We've seen the indexes fall to support. We've seen the buyers step in, or at least the sellers stop selling. And that's that. So like I say, any chart pattern, as bullish or bearish as it is an untriggered pattern until you get that sell signal. So although we had one sell signal on the SPY 60-minute chart with a breakdown, what happened? Again, it all comes together. We hit support on just about everything else, and so far have held those support levels. So that's it. Seems to me the market needs a little nudge to the downside, and then to try to quantify it, and I believe I mentioned this too in the post I made on the front page, my target is the 294 level on SPY, the top of that trading range, give or take. So that's about it's not huge, it's a 1.3% drop, but if you're trading futures, especially a day trader, a few contracts, ES or NQ, that'll put a few $1,000 in your pocket easily. So I think you already know that if you trade futures. And if you don't, if you're a typical swing trader and you don't like to use leverage, well, then you'll need to calculate, okay, is that worth it? Do I want to take a swing trade that only has about 1.3% profit potential? And if you do, you need to use a stop in line with that. Don't use a 3% stop. Don't risk 3% to make 1.2. I like to use risk-reward ratios of 3 to 1 or better, meaning I'll risk $1 to make 3, and that's a rough number there. But as I need to wrap this video up and get it out to you guys, remember the charts are somewhat stacked right now, and what that means is if we come down to that level, we test that 294 level, okay, what's going to happen is the bearish case that I've been making for quite a while now will be only further strengthened or firmed up here on these daily charts. I'm toggling between different boards here. What do I mean by that? Well, we had a divergent high here. We had a correction, pretty good one too. We pushed up and only made a larger, more powerful divergent high. It's an extension of these divergences that have been building back here. Divergent high 1, 2, 3. 1 with a correction, 2 with a correction, 3. And because they're consecutive divergences, it's all the same. It's just a bigger, larger divergence, and that tells me that could play out for a much larger correction than these previous two right here. At minimum, it should play out for something similar. So where I'm going with that is my initial target's 294. Why I think the odds of reaction are good there. A swing trader, if I was swing trading, and I do have positions that are swing trades, but right now I'm talking active trader hat, most likely see a bounce there. And let me tell you, if we don't, then that tells me there's a lot of sellers. The supply-demand dynamics have shifted. If we burn right on through there and don't even hiccup on 294, that's going to be pretty bearish. And so what I was trying to get at here, a swing trader might hold out at 294, assuming you are currently short or plan to short, and ride it out, and then start looking at some of these. You know, this was a minimum target from earlier in the year, and it's still valid. It was hit once back here, and I still think we go down to it. And so to measure it out for you, that's 273. And as you guys probably know, my favorite index is QQQ because it's tech heavy, and there's overcrowded trades and have been for many years on a lot of the market leading FANG stocks, Facebook, Alphabet, Amazon. And so what happens is when you have a correction mode, QQQ is going to fall most likely more than SPY. So if SPY drops 3%, you'll probably drop 4% on QQQ. There's no hard formula, but it's you know, it's not twice as much, but it's more than a 1-to-1 ratio. And here, I can even show you targets there. That would be comparable to that SPY target I just showed you, and that would be, you know, if we drop to that 179.21 area, about a 5% drop. And these are other additional targets that very well could be hit, because again, right now, the beginning of the video was focused all on these near-term developments, 1-minute charts. I showed you 5-minute charts, all the way out to the 60-minute charts until right now when I looped over to these daily charts. So this is a point. Those little breakdowns with little measured targets on the 5-minute flags, it leads to a cascading event, and which could finally give us that breakdown of these trend lines off the on XLK, the tech sector ETF, as well as QQQ from the lows on the 24th. So first things first, and that is to take out today's lows, which as I did the video, there it is. Like I said, I wasn't stalling to wait for it. I told you I'd expect it would happen. So there it is. There's your sell signals. So enjoy, guys. Maybe I'll throw in another official short on QQQ. Like I said, I've left the targets out there. I know some of you extended your stops. This has just been a whippy market, and I've got tired of, you know, suspending stops. These are the previous stops, I believe, on the last QQQ short trade, and they're still where I think we're going. I have no idea where the price levels went. Maybe, oh, that was it. That was from the last official trade. So there it is. If you're new to the site, and in this trade's still up. I never even got around to posting it being stopped out. I just got tired of suspending the stops with these whippiness up here, but I maintained when I did it, and for a while now, that I think the upside was limited in the market. So if you held on, great. And if you didn't, if you got stopped out, then look, you're about to have another major sell signal. And so again, whether I add it or not, that's up to you. Semis, I still think, and have maintained for a long time, as much as I just said QQQ should outperform SPY on the way down, SOX will do the same thing to QQQ. It'll outperform. A lot more bang for your buck in the semis. And I looked earlier today, and I'm looking again right now. Every single component of SOXX except Taiwan Semi is trading red today. So good stuff, guys. All right, let me get it out to you, and hopefully that helps. So it looks like we have some sell signals now in the market. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.